Good morning and welcome to the Quantum Leap Futures Morning Leap session for Friday, January the 19th, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets. And then we create our hypotheses or trade plans. We create two main hypotheses based on what the auction would do with whoever is in control, the bears and the bulls. And then we have two alternative, which are expansion hypotheses. We do this because we do not know what the market's going to do. Therefore, we have to wait to see what the market is doing and then execute the plan that best suits the market. So we set up our trade levels, our targets, and then wait to see how the day is developing. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So taking a look at yesterday. Yesterday, we were looking for a rotational day. We were looking for a rotation down into this thin area and then basing and then starting to walk our way up and possibly putting in a new all-time high. It was a real rotational day, and we basically did a lot of repair work in this thin area between the upper and the lower distributions, and couldn't break out. It was an inside day. On the SPX, the actual cash market, we had a bearish engulfing and then two days of inside days. And, apparently that's only happened a couple times since I think 1970 or something like that. But anyway, it's not a bullish signal, but I'm not certain that this market is ready to roll over just yet. It'll give us clues to what that happens. We did close near the low of the day and near the mid of the prior day, but all in all, we were expecting a rotational day, and that's exactly what we got, to the point where we had a neutral day. So neutral days have a tendency to follow neutral days. Neutral gets neutral. So we will be looking for another rotational day. Of course, today we've got headline risk with the government shutdown, and of course it is option expiration. So let's take a look at the options expiration first. Just taking a look at the SPY and where the max pain is. You can see that the max pain is right here at the 268 area, and currently the market is trading. The SPY is trading at 278.83. So they're likely to take it down to this 268 area on the SPY to cause some pains, and then rotate it on both sides of that. So it's an interesting spot in the SPY, but doesn't necessarily mean we're going to get there. That's just where the maximum pain is going to be caused by both the call and the put owners. So and as far as economic news goes, we don't have a lot. We just had foreign securities purchases from Canada, foreign security purchases by Canadians, and manufacturing sales, and not much of a market mover. At 10 o'clock, we got the Michigan sentiment and consumer expectations and current conditions. We've got 10:30 the ECRI weekly annualized, which is not a big thing. The rig count at 1 o'clock. We do have Fed member Quarles speaking at 1 o'clock as well, but that's it. Everything else is going to be about whether or not the government shuts down or not. I don't know when the vote is. If anybody has an idea when they're actually, the House passed it last night, the Senate, it goes to the Senate today. the deadline is midnight. So whether or not they get it done during the RTH trading hours or later this evening, I don't know. But it is an unknown, and we have to be very careful. I always like to start my day, of course, with a simple candlestick chart, taking a look at the macro to the micro. I use 2 moving averages. I use the 9 EMA and the 20 SMA, and I start on a monthly. And what I'm looking for is where we are in terms of the trend. Are we, do we have good slope and separation? Is a trend? Are we coming down and testing the 9 and challenging the trend? Are we violating the trend by the break of the 20 and a possible trend change? On the monthly, you can see, again, just this is I don't know how many months is this now. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. We're on our 15th month of one time frame, actually 14 because it would start here. But 14 months of one time framing up. It's very, 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 very rare in the marketplace. Going to the weekly, same thing on the weekly. Good slope, good separation. We did violate the one-time framing, but they took it all back, and here we are near all-time highs, flirting with the 2800s, and good slope and separation. Going to the daily, we do have a inside bar yesterday. Now we did not get the we had the bearish engulfing, but we did not get the inside day on the ES. We did get it on the cash, but we did get the Mr. Sneaky, the inside day yesterday. So this is leading to a possible retest down to the technical gap against the 9, down to the 27.8075. So just be cognizant of the fact, and basically, are we going to hold below yesterday? Going to the 60-minute, the 240, the 4-hour. The intraday, you can see that we're getting into a consolidation here and going sideways, building energy for the next move. We are, lost some slope and separation. We're sitting right on top of the 9 right now. We tested the 20, but we did not break it. So we just have to watch that. Down to the 60-minute. We are getting a possible break of the 20 right here, and see if they bounce off the 20 and move back up. And then on the 30-minute, you can see that we've got the same scenario coming down with possible move below the 20, and then just one last one down to the 5-minute. And I might have my time frame a little bit too long for 5-minute. It's going to take a second to load here. Once it starts, there's nothing I can do. So I'll take a sip of my tea. And on the 5-minute, you can see that we broke below the 9 and the 20, and we're getting a start of a trend down with slope and separation, although they are testing the 20 from below. So got some interesting things happening in the intraday that could show us the way to a move down. Taking a look at the macro. Now, yesterday I was talking about, we were watching the fact that the microcomposite, was down here at the microcomposite VPOC was down here at the 2783. We were watching the 93-94 area and the 04 area to see if the microcomposite shifted. It actually shifted up to the 2804 and a quarter at one point in time, but then it shifted down to the 2850. So right now, this is going to be a very important over underline for us, because if we get above it, they're accepting value higher, and we're likely to go make new highs and test up, at least a move up into the 2804 and a quarter. But if we can't get above it, then the sellers are holding value, and we're likely to rotate down and search for more buyers with conviction. And where we'll find that, well, the first spot I'd be looking would be in the 93, 94 area. They found it yesterday. Yesterday's low at 27.93.75 was no surprise. That was a area of high price acceptance. And then we've got to watch that 88, 89 area, because below that we're likely to move down and make a trip through the microcomposite value area down to 84, but more likely down to 83 and a quarter. Overnight session inventory is rather mixed. I would say it's probably about 70% net long. We did get back above the open. You can see that once we got into the European session, they went to try to make new highs, failed, and we've come back and we're testing the overnight VPOC right now, shifted from the 2805 down to the 2798. So we'll see if that's buyers stepping in here, and we can hold that and rotate us up. A lot of selling, coming in. This is a blunt area up here. The VPOC was up there. So this is a weak high still. We have a weak high at the 0950, and we have a weak high here at the 06 level. So taking a look at our levels, our overnight low is 91.75. So we did dip down below the prior day RTH session. Our overnight high is 06. Let me just get rid of some of these. Come on, can't even move my things around. Our overnight VPOC is not likely going to shift. Well, it could shift. We've got time. It could shift up to like the 99 or 98.75. Right now it is at 98. So that's where we're going to put it. And then there's an LVN right here at the 02 and a quarter. That's going to be a trade area. It's actually just below the value area high and the open from the prior day. I'm actually going to move it to that, because it's a significant level on multiple confluences. And basically, that's a very toothy, very blunt profile that really isn't giving us strong areas of confluence or conviction here, between 02 and the 95 area. So our daily ATR 20 period full session average true range is running at 1834. So off of the low overnight of 91.75, our upside daily ATR is at 28.10. And there's that rule of 10. Here's my daily. And then off of the overnight high of 28.06, our downside daily ATR is down at 27.8775. And our week open was 2789.75, and our daily ATR is 1834. So the weekly critical mass is at 2808. So for those that don't know what weekly critical mass is the fact that if we get above the 2808 and hold above it, we're less probable to come down and test the open of the week, and therefore we could see the sellers step away and the buyers take control and drift into the close. This actually even intensifies because of the fact that our weekly ATR 20 period full session average true range is 37,325. And off of the low of the week, 2769.25, we've already breached our weekly ATR upside target. So if we get above there and we get above critical mass, they're likely going to go put in a new all-time high. And then if we get above the daily, we could go into range expansion and price discovery higher. And we'll be watching for that. Of course, remember, there's a lot of headline news and there is options expiration. So there's going to be a lot of games that are going to be played. In fact, if you're struggling, this would not be a bad day to take off or just go to the sidelines early. Our other levels we want to pay attention to is our value area. Yesterday's value area was a valid value area, so 27.97.25. Value area high. The O2, of course, for multiple reasons, 0275, it's going to be very tough to trade in this area because you can see how blunt this area is so far in the Globex. And we did get a VPOC shift up to the 2800. So this overnight VPOC is basically sitting right on this yesterday's VPOC, but more important, it's right on top of the micro composite VPOC. And if we get above it, okay, the price is being accepted higher from the shift from the 2783 area up. Next one we'd be watching for is to see if it shifts again back up to the 2804.25. So those are the levels. In terms of hypotheses, I'm looking for a rotational day. I'm looking for the possibility of testing down into the 87 area based on maximum pain. That's possible. But I'm also looking for a neutral day. So depending on what the range is, the first hour, we're likely to break both sides of that today. Likely, probably a tough word. It's something that I'll be watching for as a possibility. So we are still in an uptrend. So my hypotheses really don't change that much. I'm looking for an open auction in range. I'm looking for a move down to at least close the naked close. The close is 27.9650. And then somewhere between 96.50 and the 87, it's a big area to watch, but I think we'll see some wide rotations. I'm looking for buyers to step in and start working our way up, and start working towards the all-time high and a new all-time high, which could be quite possible. If they put out an announcement that they're is not going to be a government closure and we are above the 2800 mark, we're likely going to go and likely again, we have possibility that we're going to go put in a new all-time high. Hypo 2 is an open auction in range, leaving the naked close alone, pushing up into the overnight high, taking out the overnight high, pushing through and possibly failing to break out or just getting a false breakout, and then rotating us down and working our way all the way through down towards the overnight low, chopping around here and then basing and coming back up towards that 2800 again. Those are my hypo 1s and hypo 2. I think they have equal weight. I also think that they're just opposite directions of the same plan on what's going to happen first. But basically, a wide rotational day with a break of the IB on both sides. Hypo 3 is going to be an open auction in range, a failure to break out and make new all-time highs, and then rotate down and continue to fail and push down and come down here towards this 2780 area. Our key line in the sand is not going to change. It's going to be the 87 area. You can use 88. I just want to make sure it gets below the 87, but basically between 87 and 88. Of course, our over-under line is going to be 2800, and looking for the longs above 2800, looking for the shorts below 2800. So hypo 3, open auction, move up, fail to break out or false breakout, fail. Buyers take strong control, rotate us right through yesterday. Probably some chop around the 95 area, and then fail and come down and move down towards the 2780 to 2778 as an expansion day, and coming back towards that 20 daily average down there at the 2780 and closing the technical gap against the Mr. Sneaky, okay, that we saw yesterday. And then hypo 4 is an open auction, rotation down, fail to take out the overnight low, hold yesterday's RTH range, and then start working our way back up and rotating up, coming up, chopping in the 2804 to 2809 area, and then breaking out, and then hitting our measured move at 2813 and pushing up towards this is yesterday's critical mass, working our way back up towards the 28, not working our way back up, working our way up into the 2820 to 2825. That is my hypo 4. So those are my 4 hypotheses for the ES. Looking at gold, it looked like they were going to break it to the downside yesterday, and then near the close they whipped it back up. And overnight, we've come right back up into balance, and here we are chopping around the 34. I'm expecting two-sided trading and very rotational day in gold as well. Levels to watch, of course, is the 40 level. Above the 40, look for them to test the other side of this distribution zone up at the 1342 area, and anything above, look for the continuation and the breakout above 45 up into the 50s. But if we don't hold the 27 area again, look for them to push down through to the 18 to the 16 area. So that's what I'm looking at. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.